Hey, this is Danielle. Today I want to talk about the semiconductors and the leadership they're showing in addition to a setup that I'm looking at in one of my favorite names, which is going to be AMD. So, semiconductors pulled back over the course of the last week or so, but they pulled back very neatly into the 34 EMA, which is right here. You can see just by drawing some rough levels that this is a pretty symmetrical pullback. Whenever you have pullbacks that are similar in nature, it just gives you a good buying opportunity because you can say, hey, this is um, traded lower the last three times, right about the same amount, and those last three times it's rallied afterwards. So this time, if it does the same thing again, where are we going to end up? Well, we'd end up right around 265, right around 270. So looking at SMH, you definitely have some nice bullish price patterns there. And then after that, generally break it down and look at some of my favorite tickers in this space, one of them being AMD. So AMD was up, 3.2% today. When you're looking at AMD, there is also a technical setup here. You've got this squeeze, this 195-minute squeeze. It's a bit of a slingshot squeeze. You can see that it is, previously it was shifting to the downside, right? But now it's slingshotting higher. So you can see that it went from red to yellow. Hasn't quite yet fired. We're still in consolidation, but you do have this symmetrical pullback, and you also have a two-step pattern as well. So there's a couple different reasons why I think this one could go higher. In addition to the fact that you can see that the Nasdaq was down today, and by the time you get all the way to the end of the day, I mean it almost went positive. So you have a day where the Nasdaq is flat after recovering from being negative. And then you have the semiconductors and AMD specifically that is definitely leading the way higher, relative strength winner. And so that tells me that, hey, if a little bit more buying picks up in the NASDAQ overall, stick with this relative strength winner and trade this one to the upside. So I'm looking at trading this one up into 100, 105, up into that zone. And the way that I would like to do that is with a butterfly. So I just put this one on just right before the close. I'm looking at the monthly expiration series, April 21st. The reason why I'm looking at that is because typically with these highly traded names, you get a lot of high open interest around those monthly series, and you can see that, during the monthly series at this $100 strike, you have a lot of contracts outstanding. You have 34,000 contracts right here in the 100 strike, and these other strikes, 3,000, 1,000, 2,000, 2,000, 1,000. So obviously this one is substantially different, right? So when you have that open interest like that, it really acts as a price magnet, which is a good spot for a butterfly. So when I set up a butterfly, I have a long strike here. My long strike is going to be the 95. So what that means is that I want price to be up above that 95 strike because this is going to be a long strike. After that, I have a target up here at $100, which is where that high open interest is. And in your butterfly, that's going to be your short strike. So when you have a short strike, essentially you want the price to be between here and here, because you want it to stay below your short strike. And ideally, if the price comes right up into this zone, then you can capitalize on the long strike here, and hopefully when you sell this short strike, this strike will decay over time, and that's how you make money on that strike. Now the upper strike is just another strike that you can have up here for protection, because in the options market you don't want to be long one and short two, because then you would have unlimited risk on a short call at 100 And if, the stock price goes to 120, you have a lot of risk there. So the butterfly, what it does is it gives you one long strike here, another long strike here, and two short here, so that you do not have any unlimited risk. The risk that you have is going to be the debit that you paid. The debit that I paid is $1.21 per contract, and this is 4 contracts. So that's going to be less than $500. So this is a $500 trade on AMD, targeting this $100 strike price for the April monthly expiration series. So thank you so much for your time. I hope you had a great Monday, and I'll look forward to seeing you in the next video.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me